welcome the title queen in today from Kensington. Is it Kensington?
Kensington Vanguard National Land Services.
There we go. So I forgot. I'm sorry. I'm not reading it. Two cards in front of me. And I want to, and this is Erika Baldino. Erika, welcome to our broadcast.
Thank you.
I want to welcome everybody. It's episode 93 of Real Estate Talk TGIF. We all know what TGIF stands for now, don't we?
Thank God it's Friday.
No, it's Friday and that works, but it's thank God it's finale. That's correct. That's me. It's Friday. It both works. So let's get right into it. So Erika, you are a title person. You do title work. You're a VP of your company.
Yes.
But you didn't start there. Tell me a little bit about your background and how you got into title and all that fun stuff.
So I actually graduated with a degree in biochemistry, and I minored in lab sciences, and I was actually doing laboratory research when I graduated. I worked for a lab in the Hackensack, on the Hackensack River called the Meadowlands Environmental Research Institute. And I was actually a chemist for 4 years. So I ended up transitioning into title insurance. It seems to be one of those industries that you fall into by accident. But I had known the owner of a very large residential title company in New Jersey. And I had left that firm about 4 or 5 years ago to now work for a firm in Manhattan that has a national footprint and a national platform, both in residential and commercial. So it has been quite the transition.
Awesome. So talk to me about, you were a scientist and now you're doing title. So how does the chemistry and the science relate?
So especially in the state of New Jersey and all of the states in the United States that are older, that are the first states in the union, a lot of our deeds and records are all in the vault. And that's kind of the issue that we're dealing with right now with the COVID crisis, is that there's a lot of paper documents. And title insurance is a science as much as it is an art. So the process starts by, there are subcontractors we use that are in each of the counties. And when a real estate agent or an attorney sends us a contract, they get to work immediately. They do all of this research. They go back 60 years. And you have to be very organized. You can't miss mortgages. You can't miss judgments. So when I started, that's kind of what drew me to the field. And I had told my boss at the time that I had to learn how to do all of this. And I had to learn how to bind the insurance because I couldn't sell what I didn't know. And I feel that way in real estate, regardless. I don't think anybody can sell what they don't know. And so I learned title from the ground up and have become very passionate about it ever since.
Awesome. So you talk about the science of that's the science of title. And we also we talked earlier in the week, we talked about the guts of title. So talk to me a little bit about what title is and what it does. Title insurance, that is.
So, my kind of mantra that I use that makes it easier to explain to real estate agents, which then I think in turn makes it easier to explain to their clients, is that title insurance is the only insurance that insures the past and not the future. So typically we get medical insurance in case we get sick, right? You get insurance on your phone in case you drop it and break it. You get title insurance in case something happened on the property 40 years ago that you're not aware of. So that's the kind of the best and most concise explanation of what title insurance is.
Right. So how far can you go back?
We can go back. I've gone back to the 1600s. So
really,
when the searchers searched where, Prudential Stadium in Newark, where the Devils play.
Yes.
So our searchers had to go all the way back to the Dutch burial graveyard records. They had to go into the Newark Museum to pull maps that were from the 1600s. So on large commercial projects, you could go as far back as history will take us. And during that project, by the way, and you could Google it because it's out there, the searchers had found that there was a burial graveyard where they were digging for Prudential. Wow. And the contractors were pissed because then they had to excavate the bodies, and that totally added to the project, like hundreds of thousands of dollars added to the project. And it was found by a title searcher looking at old tax maps.
Yeah, no, I remember years ago in the 80s, we bought a property that the description was 100 paces to the old rock wall right next to the oak tree.
Right.
How do you handle stuff like that when it's that old?
So there's actually, and especially like in parts of Patterson where the houses are so close to each other, it's actually hard for surveyors to start and to get us legal descriptions because there's not a pinpoint to start at. So back in the day, they would just use rocks and markers and just random things that were on the property. Now today, we've gotten more specific, and sometimes we drill stakes and start points to make it easier. But there are ownership issues because of it. So that's definitely something we deal with on the older properties.
Well, you know, I see out when they're doing surveys and stuff, they put pins in a sidewalk or whatever, that kind of stuff. Are those the start points you talk of?
Yeah. Yep.
Okay, cool. All right. So we talked about titles. So talk to me about what you're doing today. Here we got the COVID-19 crisis, this pandemic, which is everybody's really enjoying, not. And are you still working on doing title research? Can you do title research still now? Talk to me about that.
So every county is different. So that's presented a very huge problem for us because we have to really be in tune what's going on all the way up from Sussex down to Camden, right? I have to know everything that's going on in every county. Some counties are closed completely. Some counties are appointment only, which means those searchers that I talk about can make an appointment, they can go in, they can access the records. The counties that are closed completely, some are online. Essex County, for example, goes only back to 2001. So I'm on a purchase now where the owners that are selling bought it in 1995. So
Right.
This is going to present a problem because there's a 6-year gap in records. So I would say right now, going forward with COVID, every file is a case-by-case basis. I have another file where surrogate records are not found. There's sometimes if there's estate issues, it's case by case. It's whatever the limitations are on in the county. But we're trying to get those binders out. And I think every title company in the state's in the same position, obviously, and everybody's trying. It's just not having access to those records are challenging. Now, I insure in California, everything's online. It's a newer state in the union, so their land records are not as complicated, and it's okay in California. So I really think it just depends on where you are, whether or not your file can close.
So, I mean, California is a lot more advanced than we are here on the East Coast?
Only because, from what I've been told, only because they're a newer state, respectively. So because their land records aren't that complicated, they don't have, the 1600s Dutch burial graveyards that we have. They've been able to get all of their documents up and running and indexed. It's been a bear here. And also we have so many houses, like per capita. So we've not had as much success as some of the newer states out west.
So when you say counties are closed down, does that mean you can't access and can't close any deals?
So as far as the search, the deed and record room, we call it the vault. So that's our terminology. And the vault looks like a vault. It's a big room in the basement with a big door that shuts. That door is closed. They lock it. It's not accessible. They won't let you into the city hall to even go down there, the courthouse to go down there. So that's right. They're under lock and key.
Okay.
So no, we can't go in. We can only do what we have online.
Interesting.
And it's important, by the way, more so than ever, for when a listing agent takes a listing to ask for back title, to ask for a title policy. And I know it's not something that real estate agents historically get involved in, but the title policy is the most important part of the transaction anyway. So just ask for it up front when you take the listing.
So if the title is the most important, it seems to be the most, maybe I'll put this wrong, but it seems that it's the most, it's the thing that gets the least amount of thought process through everything, right?
Right.
And, when it comes to all that, talk to me about that and the difference that people should look at it. Why should they look at it differently and how?
So I tell people my job is to find problems, and nobody likes somebody that finds problems, right? But the more problems I find, it means the better job I'm doing protecting the buyer. So we look for everything, right? We look for open mortgages, prior open mortgages, home equity lines that are still open. We make sure that they're closed. That was a huge issue a couple years ago where title companies would not make sure that the seller's home equity line was closed and discharged. So a seller could actually sell the house, the new buyers would move in, and the seller would keep using their home equity line of credit. That's a huge lien on title and such an issue for your buyer to have to go through. So the more problems that I find, that means that we're just protecting your borrower and making sure that they own the house free and clear, because the last thing we want is for our borrowers to have to submit a title claim. That's like worst case scenario. And it's such a pain in the butt to submit a title claim. So we're trying to get that to the fact that they don't have to ever submit that title claim.
Okay. So someone buys a home and they go to do something, I don't know, put a fence up.
Right.
And there is a discrepancy in the border that the surveyor found, and they have to come to the title company. So the surveyor gets the anger of the homeowner. And what does the surveyor do at that point? Does he come after title, or is that up to the homeowner to go after the title, go talk to the title company?
It depends who messed up, right? First of all, there's clients that don't get surveys,
right? Because
it's cheaper, right? Not spending the $700. There should be no real estate agent advocating for that, because number one, that's the practice of law to not tell somebody to get a survey. And number two, it's just not correct. Everybody should be getting surveys.
Right.
So if this person didn't get a survey, then the title company would issue what's called a no survey endorsement. Basically, that their title policy would say, yeah, you never got a survey, so we can't really talk about ownership around the borders because we don't know, because you don't know, right? So then it would just be their fault for not getting a survey. If they wanted to use the other person's surveyor or the survey, which sometimes happens where the seller's like, yeah, I have a copy of my survey, just use it. We would read that survey and let everyone know if we thought it was acceptable to endorse into title, right? So if we said, yes, that survey is great and we can use it, and we plotted it and we made a mistake, then it very well could be a title claim. So that's kind of how that works. But it's more than just title claims for survey disputes, right? You could have a title claim for a shared driveway. So
right.
As a real estate agent, you could go and tell somebody, yes, this house is a shared driveway. Both people have equal access and you're fine. You can park your car around the back. It's happened where the lady next door, you move in and she parks her car right in the middle of the driveway, and you knock on the door and you're like, hey, that's my driveway, I need to get in. And the lady's like, no, you can't go in. It's not really your driveway. There was nothing ever recorded that said it was a shared driveway. Like, tough shit, basically. And what happens at that point is, now, as the real estate agent, you've told someone to pay, let's say, $400,000 for a property because it has a detached garage that they now can't access. So the property's not worth $400,000 anymore. It's
right.
worth $350,000, let's say. When they submit a title claim, I would be responsible for paying the $50,000 back to them because I had told them at closing that they had the access and they really didn't.
So when you say you would be, is that you or the title company? Me,
the title company. So, okay. When you work with a title agent, right? So there's agents and there's underwriters. So I'm an agent, and there's 4 or 5 main underwriters that everyone can write for. So what typically happens is when a claim comes in, when somebody's like, hey, we need to be made whole on this $50,000 because we shouldn't have bought the property, we don't have access, my underwriter pays it. And they're just like, you know what, pay the claim. We get it. Somebody messed up. And then the underwriter comes for blood, right? So they could come after the agency and be like, you guys didn't do a good job. You were irresponsible in this insurance. Or they could go to the neighbor's attorney and say, you didn't file this easement correctly. So it's their job as the insurance company to try to recoup that money. But at the end of the day, the insured that has a claim, as long as it's a valid claim, is going to get the money that they're owed.
Okay, cool. So, all right. So whoever said that shared driveways was a good idea?
Little tiny towns with little tiny houses.
Yeah. I see shared driveways. I just walk away from them. I mean, when I was selling and stuff, I see shared drive. I would never show it. I would show it if they really wanted to, but it's something I would walk away from.
I mean, if the easement is recorded properly, there should be no issue on who gets to use the driveway. if it's not recorded correctly, then it becomes a big issue and it's a headache for your client.
Right. So what other things can real estate agents do to circumvent any issues when it comes to title?
Well, we really don't know what's going to be on title until title is ran, right? And there are some real estate agents, like especially in a short sale situation, as the listing agent will want title ran up front. For your traditional buy sale, that's not a short sale. Listen, the buyer's going to pull title. Don't let your seller incur the risk of $300-400 to pull title. It's going to come out if it comes out and there's a title issue. So in that part of it, I don't think that real estate agents can really protect the client. However, after the file closes, especially if there's issues on the file, then your client should be getting a title policy. And that title policy, especially in our state, doesn't come out until after the deed's recorded. It could be a month to 3 to 4 months after, depending on the turnaround time of the title company. So for me, I think it is a great way to tell real estate agents to follow up with your client. It's not just a blind phone call. Hey, how are you? Refer me a deal. It's, hey, did you get that copy of your deed? Did you get the copy of your title policy? Did you put it somewhere safe? And by the way, think of me in the future. That was the reason for my follow-up. So if anybody has any takeaways from this today, it would be call your client 2 months after you close and ask them if they got their title policy.
Well, that's pretty interesting. I mean, there's as well as I do, I think that most agents almost forget about their clients, their buyers and stuff, and which to me makes them orphans. And I actually teach a part of one of my classes about orphan buyers and orphan sellers, and to go after them because their agent forgot about them. We work on that all the time.
I think it's insane during the transaction. You basically make the buyer's number your favorite in your cell phone, right? Like you're on the phone with them 2, 3, 4 times a day. There's texts, there's good night, how are you, good morning, for that 2 months that they're in the buyer process. And then all of a sudden you close and they drop off. So, and maybe you don't know what to talk to them about, right? Because you're not doing a transaction. But little things like, hey, did you get your original deed? And hey, did you get your title policy? Go a long way. And I would say a majority of the real estate agents don't even realize that that's even a thing, because I'm on a file now and the seller is a real estate agent and she didn't even know she never was given a policy. So always find your policy and hold on to them.
So that would be a good thing for a listing agent going into a listing to ask them for right up front would be the title policy, right? What can that do to help you along, especially in today's life?
So especially now with COVID, what the title policy does is it allows us to start at the date the policy was issued, right? So most banks want a 60-year search for a purchase. Hands down, you got to go back 60 years. But if I have a policy where they just bought in 2015, then I only have to go 2015 to current, because anything that happened on the past of the property is a problem of the old title company because they did that work. So it's very important for listing agents to ask for a copy of the policy. And if the person goes, I don't even know what you're talking about, then right away mitigate any wasted time and say, do you remember who your selling attorney or your buying attorney was? Do you remember who you used? Let me contact them. Let me try to pull your file. Let's try to get that title policy so that we can help the transaction along. Back title is a great thing for us to have.
So if you get that title policy, then let's say 2015, right? So you're going to insure from 2015 to 2020. But what about 2015? Say there's a claim and it's found that it goes back to 1982. Okay. What happens then?
If there's a claim and the other company missed it, or if it was before the other company searched, if the claim was way before the search started of the 60 years, do you mean?
Well, I'm talking about the 2015 title policy. Is that what's going to be in takes front and center, or is it the new policy from 2020?
So here's what happens. Pre-COVID, before COVID was a thing, if I had a policy from 2015 and we trusted the title company, because remember, not all title companies are created equal and there's some that do better searches than other. So our company has a list of people that we know are pretty good and we trust, and people that don't really do their job very well and we don't trust. If it was from a good title policy, we would do we would indemn the policy. So we would say, okay, agent X on underwriter Y is stating the title's clean up until 2015, and we're going to indemn it. If there's an issue after I close it from 1980, then that old title company would be the one that takes the fall for it because they gave us an indemn letter saying we did our job, don't worry about it, title's clear.
Is that common to get an indemn letter from them?
That would be the only way we would be able to not do all of the searches. So now here we are in COVID world, right, where we're all using title policies because that's all that we have right now. We can't even get into the records. So title agents are directed by our underwriters. And right now our underwriters are allowing us to insure anything under $3 million without going to them. So if it's under $3 million, we're using the title policies, we're getting indemn letters. If it's a construction loan over $1 million, or if it's over a $3 million purchase price, it's got to wait until after COVID until we have search records. Because the underwriters could be on a hook for a claim that's $6, $7, $8 million. I mean, that's a lot of money. So they're not allowing us to insure over the 3 million mark.
Okay. So, but there are areas where you can, the stuff's online today in the COVID world where you can actually do your title searching.
Yes. And every single county disclaimer says that this is not an accurate database for title insurance.
Okay.
So we're using them, but they're not accurate. And we're issuing in the COVID world what's called gap insurance. And the gap insurance covers any gaps in the title that we couldn't see because we couldn't get in that policy. And it also covers if anything goes on record between now and the time we record something, it would cover that as well. Because especially in this state, what everyone thinks is, oh, they can e-record and all the documents are online. Not all the documents are online. The ones that are online have traditionally never been accurate for search work. We've never used them. And number 3, yes, you can e-record, except if there's transfer tax. If the seller has to pay transfer tax, which is almost every case because there's very limited number of exemptions, then somebody in the county has to receive the check with the transfer tax to make sure the deed is recorded. So yeah, I could send a deed in for e-recording any day of the week. It's going to be held in the cloud in outer space until somebody in the county looks at the check and deposits it. So that's a huge gap in title with that deed not going on record.
That can't be done digitally, transfer funds?
No, they want checks. It's old school.
So do you think that because of COVID or because of anything, or even like, do you think they'll ever get out of the 70s, the governments?
It's not just the governments. I'm on a file now, and it's an HOA, and they only want certified checks to go to closing with to pay off the HOA liens. So it's not just the government. Everyone in our state thinks that checks are king, and in other states you can wire all day long and there's no problem. But in this state, for their records, it's with checks. So I don't know if it'll force them to go digital, but there's a lot of things we don't have access to when they're down.
Why do you think that is?
I think it's just how their tracking systems are built. Like, okay, for example, vacant lot fines. A vacant lot fine is not if the lot is vacant. It's a misnomer. A vacant lot fine is a fine that towns can assess to your property if it looks like hell, right? You stopped mowing the lawn, the shutters are falling down, there's a hole in the roof. And they started this in 2008 when people weren't paying their taxes and the towns were losing money. They were like, what's a good moneymaker? Vacant lot fines. That's how they started. So now when you have a property that looks like hell, they assess these fines. When I call, let's say it's in Newark. When I call City Hall in Newark, they are closed. I can't get what the vacant lot fines are due, which means now I have to hold an escrow, which is a pain in the butt if I don't hold enough escrow. I've had files where the vacant lot fines have been 15 to 20 grand,
Wow.
$1,000 coming out of the seller. So things like that, final water, water and sewer bills, you have to call and ask a human. It's not, some of these towns aren't online, and they're just not, no one was ready for this in our state.
So, okay. So we talked about the basic transaction that everybody deals with. Talk to me about there's a lot of people out there that are buying tax liens and buying certificates and stuff to take over properties. And I'm going to say that there are times when the actual homeowner doesn't know about it. So when you go through that, is there title insurance in that? Is the title insurance kicking on tax liens and stuff like that?
Tax liens are their own separate animal. It's their own separate bear. It is a pain in the butt. But yes, you're correct. There are investors in the state where they have a very nice portfolio that they've amassed through, I don't know, $10,000 a property in back owed taxes. So for any real estate agents that don't know, when somebody stops paying their taxes, either because they forgot, which sometimes happens, because they finished paying off their mortgage and they don't realize that part of their mortgage had a tax payment, which is typically what happens with older people. Oh, we finished our mortgage. We're done with monthly payments. No, you still have a tax payment. Our towns can't function without that money, right? Because that's the money that pays our firefighters and our teachers and pays the streets. So they do a tax lien auction so that somebody can say, hey, all right, Dave didn't pay his $3,000 this quarter. Erika's going to pay it for him. And now Erika is the tax holder. Because the towns need their money, the tax lien falls in a position that's in front of the mortgage.
Interesting.
So they take a primary position. The mortgage is secondary. This is why mortgage companies like to require escrows, because the mortgage company wants to pay your taxes because they don't want to lose in on the house if your taxes aren't paid. Do you see?
Right.
I do. Start. What happens is the town sets an interest rate, and these interest rates are amazing. They could be 7, 8, 10, 15% for the interest rates. So there's people with money that are like, yeah, I'll pay Dave's $3,000 if I can make 10% back, right? You can hold that debt for 2 years. If you buy it, this is where there's so nuanced. If Erika Baldino buys it and not Erika Baldino LLC, then Erika Baldino has to hold the debt for 2 years. At 2 years, you are able to start a tax sale foreclosure. Now, you have to give notice. You have to send notices home. And again, I'm not an attorney. This is not legal advice. I'm just telling you.
I understand. We understand that.
You have to give the person notice. You can't just show up at their door and lock them out. There is a process to tax sale foreclose on somebody. Now, when that person goes to actually take ownership of the property, no one will insure it. You cannot get title insurance. And if you do get title insurance, you get it with an exception. They take an exception for 1 year in the policy because 1 year after a tax foreclosure has foreclosed, the owner can actually still redeem the tax sale. So I can't insure good ownership of that property because you could still come back after you've been foreclosed on up to 1 calendar year and pay the money and take the property back. So we issue title policies on tax sale foreclosures with what's called an exception that states we can't ensure you actually own this property, so you're paying for title insurance, but really the title insurance isn't going to start until next year.
Okay, so they're taking a chance. What
about the person doing the tax sale foreclosure is taking a chance, which and normally, and listen, there's only like 4 attorneys in North Jersey that can actually do tax sale foreclosures. It's a very nuanced process. These guys specialize in it. So if you're actually actively foreclosing on people, you should hire one of these guys and they will teach you this and they will make you aware of the 1 year redemption period.
Yeah, I want everybody to know, I want to throw out that full disclaimer that we are not attorneys. We are not member of the bar. We're giving our learned opinions as the title queen, being an expert in title, and me being in this business for many years, too many years, I hate to count. So let's go to another question. And again, we are not attorneys. We are not members of the bar. We like to go to bars, but we're not members of the bar. So, and somebody said, have you ever passed a bar? No, not that I know of. Anyway.
No, I go right on in.
So let's talk about what a lot of talk we hear today, especially today with COVID crap, is forbearance. So as everybody knows, that your mortgage payment is something that they call PITI, P-I-T-I. It's principal, interest, I mean, my hand in there, taxes and insurance, right? Those four things. So when you ask for a forbearance, my first thought is, okay, well, that's the mortgage and the interest that I got to ask for. What about the taxes? What about the insurance? And will that create a lien on the property if you get a forbearance on the mortgage and interest, but not on the taxes, and the mortgage company doesn't pay the taxes?
Okay.
Can you talk to that at all?
Yeah. So let's go back to title insurance 101, right?
Whoa.
When you take out a mortgage, you sign a note and a mortgage. The note has a start date of payment and an end date of payment, right? Your start date is June 1st, 2020, and your end date is May 1st, 2050.
Right.
When they put you on forbearance, they are not moving the end date of that note that you signed, right? They're not doing a mortgage modification either, telling you that, okay, it was May 1st and now it's going to be December 1st because we're being nice. So if you decide to go on forbearance, at some point, the lender is going to want you to catch up and pay in full. And what's happening right now is, yes, you are allowed to skip 3 months payments, but come month 4, you better have all of them. So if you have a $2,000 a month mortgage payment, come month 4, you better have $10,000, $8,000.
How does that make any freaking sense?
It doesn't. You're going to see a ton of foreclosures because of this. The other thing that you have to realize is that your servicer is not the note holder all of the time, right? Note holder could be Chase Bank, but Erika Baldino could be doing the servicing. I could be the one collecting payments and making sure you pay on time. So the servicer can't make changes to the terms that you've signed with Chase Bank for the mortgage. So there's going to be no changes to anybody's mortgages. All this means is that if you can't make those payments for 3 months, it's not going to be a tax lien. The servicer is going to pay the taxes for you to make sure that you're current, but you're going to start to rack up a bill. It's stating that the bill isn't subject to any additional interest, but the bill is still the bill. So if you're going to skip $6,000 worth of payments in a 3-month span, come month 4, you need to have all of that money, or now you will be in trouble.
So tell me, what do you think is the reason that all of these momos out there are telling us that go for forbearance, you get 90 days, and then this weird looking governor we got in New Jersey, sorry man, but it's true, with those crazy eyes, what he's saying, okay, well, they've got to do this now. What the hell good is it if you're going to get in trouble because of it?
What it's doing is it's not giving you your 30-day lates on your credit report, right? Which can totally kill somebody's credit score and impede their ability to borrow. So if you need to take 90 days to pay, you're not getting hit with lates on your credit. That's really all it does. But again, come month 4, you need to pay in full or there's going to be consequences. This is a last resort. And the way that I believe, and this is kind of political, maybe not, but just the way that it seems that it's unraveling on Facebook is everybody thinks they get 3 months free. And maybe the mortgage payments will magically attach to the back of the note, but it's just not the way that it is happening. And you need to read the fine print before you go into any agreement.
Absolutely. And that's, I mean, as a good business owner, I mean, I have investment properties, and I went and automatically talked to them, sent them a request, have not heard back yet. I was very impressed that they actually reached out to me. Shout out to Valley, who I really don't care too much about, but my residential mortgage, they have not responded to my request at all, because I wanted to get in front of the line rather than be all the way in the back of the line. I suggest everybody do the same thing. So
at the end of the day, you should make every single effort to still pay your mortgage as normal. This should be a last resort because there's going to be hidden fees and hidden disclaimers, and make sure you understand everything. You're not getting 3 months for free. You're getting a grace period, which means they can't charge you lates. It's not going to ding your credit, and they can't charge you any additional interest because you needed more time to pay. But it's just time. You still have to pay.
Okay, I get that. I don't agree with it. I mean, there's so many things. I mean, look at the unemployment numbers from today, which is April 3rd, 2020. I think we will be over 10 million by the time the report comes out, because there were an extra 6 million this week, I think. And it's just incredible. And then more happening with Macy's and everything else, furloughing
I mean, the
employees?
unemployment numbers that just came out, the report from last month that just came out is that unemployment is up to 4%. And obviously the hospitality industry was the biggest industry to take a hit because
Yeah, but that was report. That's not the current number though.
No, I mean, when they report, there's always like a 3-week lag, I think. So when you see the numbers, in 3 weeks from now, it will tell a drastically different story.
I could be wrong, but I read there was 3.3 million filed last week, and another 3 to 6 million. I'm going to say 3 to 6 because I'm not sure if the total number was 6 or the total number for this week was 6 million filed for unemployment. I think that the servers might crash if it was that way. But Erika, what do you have to tell agents? The best thing that you could tell agents to do when it comes to title, real estate agents and homeowners and home buyers, what would be something you would tell them to do as far as title insurance to help them move in the process quicker and smoother?
Well, first I would tell buyers to definitely know who you're taking out insurance with, right? Because title insurance is one of those things that when you enter into a contract, it's just done for you. I mean, I've had friends and family that have bought houses and have forgotten to use me because somebody else called the shots. So I would tell them to know who your insurance is and who it's underwritten with, and understand that you really need to be insured with a company that's still standing after these crises. There's a lot of companies that have already shut down in the last 3 weeks, I'm sorry to say, because they have no more money and they don't have the wherewithal to work from home. And if they stop remitting, you could purchase title insurance and not get title insurance. I know that sounds insane, but it has happened time and time again but I paid for it. Well, the title company never remitted to the underwriter and never gave you a policy. So you don't have title insurance.
Right. I want to just throw in a couple of comments we have. Paul Macarone, interesting stuff. Thanks, Dave and Erika. Thank you, Paul, for tuning in. Antonio Fadalone, as always. Kimberly Morelli came in, say hello. Mark Stein, are the costs different between title companies?
So that's a great question. So costs are regulated in our state. The insurance premium is the premium. Department of Banking and Insurance sets that number. They also have a fee sheet that says what we're allowed to charge for other services such as endorsements and searches, and they all have to fall within either one set cost or a legal limit. However, there are junk fees that a lot of title companies throw in there for one reason or the other. There's copy charges and filing fees and notary fee. And I mean, my invoices have differed with other companies to the tune of $500 to $600. I mean, I saved a gentleman on a commercial refinance. I think it was $5,000 I saved him from another title company. So as much as we all say, yes, it's regulated, don't worry about it, you should still worry about it and figure out what your title company is charging you and get a quote and compare the quote, because you'll save, even if it's $50, $100. I mean, money is money, right? So it is important to understand that.
A lot of times, and again, I'm going to say that I'm not a lawyer. I never went to school to be a lawyer or a member of a bar, but I know there's a lot of times where there's an insistence upon either the mortgage company or the attorney to use a certain title company. Is that necessary, or can you insist on who you want to use as a consumer, buyer, as a buyer purchaser, right?
So at the end of the day, the consumer has every right to insist on who they want to use. They are the ones paying. They can pay for whatever insurance they want. They're not allowed to be told no. They would have to file a claim with the Consumer Finance Protection Bureau if, in fact, they were being told no. However, the consumer doesn't know what title insurance is. Unless you're my friend, you don't know enough to go tell all of these parties that this is who you want to use in title insurance. And that's why people are like, Erika, you should have a billboard, right? Well, no, we don't have commercials. We don't have billboards, because at the end of the day, the consumer is not the one that cares. They care about their homeowner's insurance. They don't care about their title insurance. Because of that, other parties in the transaction, it's not just mortgage people and real estate attorneys, it's real estate agents as well, have developed relationships with title companies for one reason or the other. Traditionally, and I would say up until 5 years ago in North Jersey, attorneys really called the shots when it came to title insurance for a multitude of reasons, right? The first being they just wanted to work with who they liked, right? Because they're the ones that have to work with us. But probably the primary reason is because back in the day, the attorneys were the ones that used to go in the vault and search. So all that work that I talked about, that we go into like Essex County vault and search, the attorneys actually did that. And the attorneys would then bind the insurance and we would just underwrite it.
Right.
So
right.
traditionally, the attorneys have had a longstanding relationship with title companies. Now on refis, mortgage brokers develop their own relationship with with title companies because you need title insurance again, especially as in our state, there's no need for attorneys to overlook the refis. 10 years ago, attorneys were still getting paid to help assist in a refi. That's not the case anymore. And now as we've progressed, you now have real estate agents for one reason or the other. They use me as well. They're like, you know what? We like to have Erika on the file. We know she's thorough. She's going to do a great job with our client closing. We know that her fees are the best in the business. So everyone's kind of calling the title shots, but at the end of the day, it's the consumer and it is the consumer's choice.
Right. So I want to thank you, Erika, for coming on today and actually answering some of the questions that I know real estate agents have had about, the last one was probably one of the most important because they hear it all the time. But how do people get in touch with you to actually, ask you about your services, ask you about, your knowledge? How do they get in touch with you? How do they connect?
Sure. So I'll post all of my contact info. My Instagram is at Erika Baldino. So that's just my name with no space. You can also find me on Facebook, Erika Baldino. My cell phone, which is attached at the hip, is 609-706-2331. And you can find my email as well. It's ebaldino@kvnational.com. So if you need anything, even if it's a file I'm not on and you're like, Erika, I don't understand. There's title issues. Why can't we close? And you need somebody to just explain it to you in English and not all this crazy jargon, call me. I'll look at the title binder and I'll tell you what's going on.
Okay, great. So I want to just do a quick little promo for what's going on with us over the next couple of weeks. Is we are on a couple of things. Everybody, I want you to know is that every morning, Mark Stein and I do a program called Level Up Today. We talk about what's going on with the real estate industry. Erika, you've been a guest on that several times. And we've been doing this for a few weeks and we will continue to do it through COVID-19 and probably after. It's a good consistency and commitment for us. We enjoy doing it. We're bringing out some of the best people that are coming on. As a matter of fact, next week, we have confirmed that Charlie Oppler will be on with us on Tuesday. As far as myself, this is Real Estate Talk TGIF. And before I go any further, I know why you came on today, and it's no secret. Everybody does the same thing. You know what it is, right?
My closing hat. Yeah,
your hat. I mean, this is like everybody wants it. I don't get it, but this is why everybody comes on, is to get a hat.
Yeah, so I want my hat.
That since you and I, all disclosures, we are friends, and I will be delivering this hat to you when we get together after COVID. And the thing is that now that's building up, I have lots of people to deliver hats to, simply because it's going to be easier. I want to also do a great plug. This is episode 93 of Real Estate TGIF, and I'm very honored to be able to announce that next Tuesday we're going to have a special episode. It's going to be episode 94, and we are going to have Tom Ferry as our guest here on Real Estate Talk TGIF. Tom's going to be talking about what you can do in this day and age of COVID. So it's going to be really cool. So I would hope everyone would show up, and we'd get a lot of people to watch. Last words, Erika. Anything?
Ooh, last words. I don't know. Today I was really hammering on title policies. So
awesome.
Ask your seller for the title policy and make sure you have yours somewhere safe if you own a home.
I want to tell everybody and thank everyone that will either watch this live or will see this as a recording. And thank you so much for your time. Please, above all else, be safe, stay healthy, and God bless. Thanks a lot. We'll see you Tuesday with Tom Ferry at 4 p.m. Eastern. Thanks.